What's good, boys and girls? This is your boy ATMBOYZ, and I'm back with another video. So, I want to quickly touch up on market structure. It's been a lot of people telling me that I should start doing market structure. It's been long overdue. So let's get into it. I'm gonna start on the H4 time frame, and then we'll go from there. So, market structure basically means like how the market is moving. You get what I'm saying? So, for example, there's three states that the market has, right? It's either an uptrend, as you can see here, or a downtrend, as you can see here, or like here, for example, which is what is called a range, or some others call it a consolidation. That really means the same thing. It means that the market isn't making any higher highs, higher lows, any lower highs, any lower lows. Sorry about that. So let's talk about market structure. Market structure basically is, like I was saying, let me just do it like this. This might be an easier way for you guys. So I'm gonna quickly show you guys. So if you can see clearly how we can see that the market is moving in an uptrend is that, okay, just do that. So how we can see that the market is moving in an uptrend is that it is clearly showing that it is making higher highs and higher lows. Higher highs, higher lows, higher high, higher low, higher high. That's another higher low. Let me just use the arrow real quick. That's another higher low. And then what happens? It makes another higher high. So that shows that what the market is in an uptrend. And now what happens here? What happens here is that the higher low that was previously printed has been broken now. And now we get a what? A lower low. Which means that when the market turned here and made this high, we knew that it was a what? A lower high. So that is pretty much market structure, guys. As long as you're able to spot these lower highs and higher lows, and higher highs and higher lows, then you are good to go. You understand? You are good to go. That is basically market structure explained. Okay. Now consolidation. Consolidation is where you can see that there are no successive higher highs and higher lows. So ranges can best be spotted with like rectangles. I like spotting my ranges like that. I know that, okay, that's a range. Here, for example, even though it was making higher highs and higher lows, this was another range here. You can see that there's no lower high, there's no lower high violated or anything like that, so that's a consolidation. Understand? So that's mainly how you spot your consolidations. There's another consolidation here. So that's how I spot my consolidations. And once I spot the consolidation, that's when I know from there where the market moves is the direction the market wants to move in. Okay. So as you can see now, clearly we're in a downtrend. So this is actually the first topic for the ATM robbery strategy. It's the first concept or first chapter, as you would say. And yeah, for the most part, this is what market structure is, and this is how we use it to our advantage. For example, if once this lower high was broken here, or this higher low, sorry, once this higher low was broken here, we could clearly see that, okay, the trend is changing, now moving into a bearish trend. So obviously here we wouldn't be looking for buys, but we'll be waiting for sell setups so we can continue with the trend. You understand? Just like here, if the market is really serious about its downtrend here, it will break this higher low Once it breaks this higher low again, what we will be looking for? We'll be looking for sell setups to continue the trend downwards. So that's why market structure is a very important topic to brush on, especially for beginners and advanced traders alike. Market structure is really the best way to go, especially if you trade price action like I do. I use price action for the most part, no indicators, none of that stuff. Okay, trust me, I have 2 years experience in these markets, and of those 2 years, a whole year or a good amount of a year was using indicators, systems, all of that. So trust me when I say indicators and systems do not work unless you use them in conjunction. Sorry about that big word. As long as you use those said systems in conjunction with price action, that's when it can work. And that's when I started to see the power of price action once I started using it in conjunction with the systems, to a point where I don't even need indicators anymore. I can merely just look at the chart and figure out what's going on. Okay. So this is just on NASDAQ, but then literally market structure on every time frame. Okay, that was just H4. This is the daily chart. This structure here. You understand? So let me just mark out this. Okay, sorry. Before I go there, let me start here. What do we see here? Consolidation. Consolidation right there. Okay. And then what happened? Once the market broke out, we could see that okay, it's now moving into a downtrend. Okay. There's a lower low, lower high, another lower low, lower high, lower low, and lower high, and made another lower low. So now this is where we want to be entering the market. This is where we spot our entries. As soon as the trend changes, that's when we are in. Okay. So now look at this. What happened here? This lower high has been violated, and now it has made a higher high. So now what are we expecting here? We're expecting a higher low. So immediately from that, we know that, okay, our directional bias is a buy. Let's go back to 4 hour. Honestly, I'd be waiting for a buy setup right here. Obviously depending on the kind of strategy you use, but then let's just, okay, this is a support and resistance strategy. So you could be waiting for a buy setup here and then go long. That way, and then you know that this would be a low high. No, your higher low from the daily. Don't forget that we're working on a daily time frame. So yeah, and then obviously go to your lower time frames, look for that setup, and you're into the trade. And then let's go back to daily so you can see. So to be honest, my target for the buy would probably be this high here, this new high that I just printed here. So okay, add something. I want to add a, where's this thing? Okay. Okay, back to full screen. Okay, so now let's say you find a buy setup there, and then stop loss probably below the zone or below this previous low here. And then the target is all the way to the upside. This is the higher high on the daily time frame. Don't forget. So just like that, you have a nice risk to reward. Okay. In these kind of situations, always target the previous high. So let's say, for example, this is our low here, for example, and then it makes another high high, Once it comes back in and we find another buy zone for the lower high, or for the higher lower, my bad, then we would be targeting the higher high that it was printed just before our buy setup. You understand? So that's the safest way to apply trading using market structure, because until there are consecutive higher highs, let's say for example, this can still be a bearish trend if it doesn't break this high. You understand? But if it does break the high, then you know that okay, you are in a bullish trend now. You understand? So that is merely just the power of using market structure. You understand? Market structure is very important, guys. Please do not sleep on it. And if you have any more questions, feel free to ask me in the comment section. I'll also be putting out the link to, I'll be also putting out the link to the ATMBOYZ free Telegram group, which is where we usually send specials for our courses and signals. We usually send our specials in the Telegram group, or you can find us on Instagram. I'll also put our Instagram handle in the description down below. And yes, thank you for watching. If you got this far, enjoy the rest of your day.